Hello everyone. Okay, so before we continue our discussion, let us quickly recall what was done in the previous class. Okay, so in the last class we discussed about what entries do we pass. Okay, so whenever we are issuing the shares, what entries are we supposed to pass? Okay, and when it comes to issue of shares, the shares can be issued either at par or premium. Always remember, the companies cannot issue the shares at discount. Okay, although they have given you the meaning of all the three terminologies, that is par, premium and discount, remember that no company can issue the shares at discount. Okay, so what is the scenario of par? So par is a situation wherein the issue price will be equivalent to face value. Okay, so 10 rupees share, if I'm issuing it at exactly 10 rupees, that would be treated as par. Okay, so what is premium? Always remember, premium is something which is extra, okay, or surplus. Now whenever the issue price is greater than the face value, that would be treated as premium. Okay, so 10 rupees share, if I'm issuing it at 12 rupees or 13 rupees, the excess amount which I receive over and above the face value, such excess amount will be treated as what? That would be treated as premium. Okay, now what is discount? Discount is something which is less. Okay, 10 rupees share, if I'm issuing it at, let's say, 8 rupees, then I'm giving a discount of 2 rupees. Is this clear? Clear about these three terminologies? So par, face value and issue price will be same. When it comes to premium, issue price will always be greater than face value. Okay, when it comes to discount, issue price will be less than the face value. Hope this is clear. Clear? After this, we discussed three more terminologies, that is full subscription, over subscription and under subscription. Okay, so whenever you're supposed to pass the journal entry with respect to receiving the application money, okay, so you need to check the actual application which was applied by the public. Now let's say the company issued 10,000 shares, whereas public applied for 12,000 shares. So it means that the company would have received the application money not pertaining to 10,000, rather 12,000 shares. Clear? So company, although it is issuing 10,000 application, but public are coming forward and they are purchasing 12,000. When I say that public are willing to subscribe, obviously they would have purchased the application. Okay, whenever they are purchasing the application, they would have paid this application money. Okay, so public applied for 12,000 shares. It means that public would have paid the application money to the extent of those 12,000 shares. Clear? So when it comes to full subscription, okay, in this particular scenario, the issued number of shares, okay, will be exactly equivalent to those number of shares which are actually applied by the public. I am issuing 10,000 shares and public are applying for 10,000 shares. Clear? So issued and applied shares will be same. Okay, when it comes to full subscription, the company issued 10,000 shares, public subscribed or applied for how many shares? 10,000. This is full subscription. When it comes to under subscription, what will happen in case of under subscription? In case of under subscription, the company would have issued 10,000 shares, but public would have applied for lesser than that. Okay, so let's say company would have applied, or public would have applied for only 8,000 shares. Company issued 10,000 shares, whereas public applied only for 8,000 shares. This would be treated as under subscription. Okay, now what is over subscription? Exactly opposite of this. Okay, what will happen in case of over subscription? So company would have issued 10,000 shares, but public will be willing to purchase more than that. Okay, so that is over subscription. I issue 10,000 shares as a company, but public are willing to subscribe for 20,000 shares. Okay, so this would be treated as over subscription. Normally whenever the demand for company share is high, okay, at that point of time, you would come across this particular scenario, that is over subscription. Okay, now in case of over subscription, what would happen is such excess application money, okay, will be rejected, and whatever is the excess application money which is received by the company, okay, so company is supposed to refund it back. Clear? Or there's one more thing which will happen, which is pro rata allotment. Okay, so we haven't discussed about pro rata allotment. You need not worry about it as of now. So we'll be discussing in detail. Okay, so as and when we proceed with this particular chapter, you'll be coming across all these situations. Okay, so what are we supposed to do when it comes to pro rata allotment? Okay, but when it comes to refunding this excess application money, we have already discussed in the previous class. So what will happen? So when I receive the application money, okay, so the entry which I'll be passing would be what? Bank account debit to share application account. When I'm refunding this particular excess application money back to the shareholders, the entry would be what? Exactly reversal of this. Okay, so the entry will be share application account debit to bank account. This would be the entry in case of refund. Clear? And then what are we supposed to do with this particular application money which is received? Ultimately, remember, whether it is application stage money, whether it is allotment stage money, or whether it is call money, all these things ultimately belongs to a group called as share capital. All these amount will ultimately be transferred where? It will be transferred to share capital. Clear? Okay, now when I'm transferring the share application money to share capital, the entry would be like this: share application account debit to share capital. Okay, from the second stage and then onwards, what are we supposed to do? We are supposed to pass the due entry first and then the receipt entry. Okay, so what will be the due entry when the allotment money is due? The entry would be like this: share allotment account debit to share capital account. Okay, so if you guys just have a look at this, I'll just show you the entries. Look at this. This is the entry when application money is received. Okay, so bank account debit to share application account. Okay, so 1 second, I'll just increase the file size so that it's visible to you all. Okay, look at this. The entry will be what? The entry will be bank account debit to share application account. Okay, then when I'm transferring this amount, okay, to share capital, look at this entry. What would be the entry? Share application account data to share capital. Okay, so if you compare these two entry, okay, look at this: share application debit over here and share application account credit over here, this will get nullified. So ultimately what will be left over? If you observe these two things, so it is just bank account debit to share capital. So this is the ultimate journal entry. Okay, so whenever the company is receiving the money by issuing the shares, the ultimate entry will be what? Bank account debit to share capital account. Only thing is, whenever the company is receiving the amount in installments, at that point of time, they need to show the amount separately, like how much is the amount pertaining to application stage, how much is the amount pertaining to allotment, and how much exactly is the amount pertaining to call money stage. Yeah. So look at this. Allotment stage and then onwards, we'll be passing due entry first and then the receipt entry. What will be the due entry? Share allotment account data to share capital, and then when we actually receive the entry will be what? Bank account data to share allotment. Okay, and same way when it comes to call money stage, okay, again just pass the same entry, due entry and then the receipt entry. Due entry will be what? Share call account debit or share first and final call account debit to share capital, and then when we actually receive the amount, the entry will be what? Bank account debit to share first and final call. Hope this is clear. Okay, so after this we had solved an illustration. I hope you guys understood why don't we pass the due entry first and receipt entry later when it comes to application stage. Remember I told you the reason? Because the company will not be aware like how many people will actually be applying. Because when I want to pass this particular entry, okay, for application money received, okay, it would depend upon the actual application which was subscribed, or the number of shares for which the public are willing to subscribe. Okay, now let's say I issue 10,000 but public are willing to subscribe for 12,000. So this particular entry I need to be passing with respect to those 12,000 shares. Clear? I cannot straight away pass the entry, okay, bank account debit to share application account 10,000 into whatever is the application money. No, because we never know. Although I'm issuing 10,000 shares, okay, but I don't know how many shares will be applied by the public. Okay, so this entry will mainly depend upon the actual number of shares for which the public are applying. Okay, so that's why we pass the receipt entry first, and then once we are receiving this particular amount, we'll get to know whether it is full subscription, over subscription or under subscription. Okay, if we would have received the excess application money, we know that such excess application money has to be refunded. Clear? And then we know how much exactly is the actual amount which we need to transfer to share capital. Clear? Okay, so I don't think there's any confusion pertaining to this illustration number 1. Okay, so let's straight away move on to the next illustration. Okay. Illustration number 1 was done, and these journal entries, okay, so everything has been available in the notes. You guys can just refer through it. Okay, so let's go through this particular illustration number 2. Let me just read this. BK Limited made an issue of 10 lakh equity shares of rupees 10 each. Okay, so payable 2 rupees on application, 4 rupees on allotment, and 4 rupees on first and final call. So they have given, okay, so how much money is received at the time of application stage, how much money is received at the time of allotment, and how much exactly is the amount which is received at the time of first and final call. Okay, so look at this. So here the issue price is 10. Okay, so this is not received in one shot, this is received in installment. Out of this 10 rupees, look at this, 2 rupees is received at application stage, 4 rupees at allotment stage, and 4 rupees at first and final call. Okay, subscriptions were received for 12 lakh shares. Okay, what is happening? The company issued 10 lakh shares, whereas public are willing to subscribe for 12 lakh shares. Okay, so will this be a situation of full subscription, under subscription, or over subscription? What is happening over here? I issued 10 lakh shares, whereas public are willing to subscribe for 12 lakh shares. So this would be clearly a situation of oversubscription. Application money in respect of 2 lakh share was refunded, okay, and the shares were duly allotted to the rest. So out of this 12 lakh rupees, 2 lakh rupees, okay, or 2 lakh shares is the excess shares. So to the extent of these 2 lakh shares, I'm refunding the excess application money, and to the extent of balance 10 lakh shares, I'm allotting it. All the amount was duly received. Pass the journal entries to give effect to these transactions. Very simple illustration, okay. Let's just go through it. Okay, so first thing is, in this case, okay, how many shares were issued? Okay, I'll just write over here. Just a second. Okay, so look at this. Number of shares issued was how much? This was 10 lakh. Okay, so the company actually issued 10 lakh shares. Okay, so how much is the number of shares which was applied by the public for subscription? Number of shares applied by public. So in this case, if you see, public applied for how much? 12 lakh shares. Okay, so this is clearly a situation of what? This is clearly a situation of oversubscription. Clear? So this is clearly a situation of oversubscription. Okay, now what will happen in case of oversubscription? Just a second. Just a minute. Okay, so this is clearly a situation of oversubscription. So how much is the excess application? So excess application will be to the extent of this 2 lakh. Okay, so this would be excess application. Okay, so what are we supposed to do with this excess application? We will be refunding it. Okay, just a second. Okay, so what happens with respect to this excess application? Excess application money will be refunded. Okay, just a moment. Okay, so we just need to refund this particular amount. Clear? Okay, now what was the issue price per share? Issue price per share, if you see, it was 10 rupees. Out of this 10 rupees, this amount is being collected in 3 different stages. Okay, so what are those? So one is application stage, allotment stage, and then call money stage. Clear? So don't worry about all these stuff, everything will be written in the notes. Okay, so just understand the concept, just listen to it and understand the concept. So how much is the application money? Application money is 2, allotment money is 4, and call money is 4. Clear? Now the very first thing what you need to remember is, I need to pass the journal entry stage wise. Application stage, first we need to pass the journal entry pertaining to application money received, and then whatever is the excess application, that will be refunded, and the balance amount will be transferred to share capital. Okay, so these are the 3 entries what we need to pass at the time of application stage. Allotment stage and call money stage, you guys know, we just need to pass the due entry first and then the receipt entry. Clear? Okay, now very first thing to know is, in this particular situation, for how many shares am I supposed to pass this entry? Okay, application money receipt entry. Will it be passed to the extent of this particular 10 lakh shares, or am I supposed to pass to the extent of this 12 lakh shares? Should I be passing the entry to the extent of these 10 lakh shares, or should I be passing the entry to the extent of this 12 lakh shares? Yes, I need to be passing the journal entry to the extent of this 12 lakh shares. The reason being very simple. Although the company issued shares, okay, that is to the extent of 10 lakh. 10 lakh number of shares was issued by the company, but public applied for how much? Public applied for 12 lakh shares. Obviously they would have paid the application money to the extent of this 12 lakh shares. Okay, so here when I'm passing the journal entry for application stage, you know the journal entry. What would be the entry? The entry would be like this: bank account debtor, Okay, so 12 lakh shares into 2 rupees, this would be 24 lakh. Okay, to what? To share application account, 24 lakh. This would be the first journal entry. Clear? So bank account debit to share application account, 24 lakh, 24 lakh. This would be the entry. Okay, so don't mind. Okay, so my handwriting, I know that it is not that great. Okay, but all these entries will be written in the notes. Okay, so don't worry at all. After this, out of this, how much is the amount which I need to transfer it to share capital, and how much is the amount which I need to refund? You already know that 2 lakh rupees or 2 lakh is the number of shares for which I had received this amount in excess. I need to refund this. So what will be the entry for refunding the excess application money? Yes, so the refund entry will be exactly reversal of this. Okay, so the entry would be like this. So share application account debit. Okay, so 2 lakh shares into 2 rupees, that is 4 lakh, to bank account, 4 lakh. Okay, so this will be the entry for refund. Clear? So when I am refunding this excess application, this is the entry which will be passing. Clear? And then out of 24 lakh, 4 lakh you are refunding it. Okay, so the balance 20 lakh is what you need to transfer it to share capital. You already know the entry. So what will be the entry for this? The entry for this would be like this. Share application account debit, 20 lakhs. Okay, so 10 lakh into 2 to share capital account. This would be the entry. Clear? Any doubt pertaining to these three stuff? Now the same thing I'll write it. Okay, so in a proper way when it comes to our notes. Okay, so let's just have a look at this. So first thing is, how much was the issue price? Issue price, we know that it was 10 rupees. Okay, so 10 rupees was the issue price. Out of this 10 rupees, we know how much is the application stage money and how much is the allotment and how much is the call money. Okay, so here application stage, allotment stage, and first and final call. I can just call it as first and final call. Yeah. Okay, so application money was 2, allotment money was 4, and first and final call amount was 4. Okay, I'm just writing the breakup, nothing else. Okay, now you know how many shares were actually issued. Okay, so I'll just write it over here. Total shares issued by the company was 10 lakh. Okay, so how much is the total shares which was applied by public? Total shares applied by public for subscription. Okay, public had applied for 12 lakh shares. Okay, so clearly the company has received excess application. Okay, so this is clearly a situation of oversubscription. Okay, so the company issued only 10 lakh shares, whereas public came forward in order to subscribe to the extent of 12 lakhs. So there's an oversubscription to the extent of 2 lakh shares. Okay, now I just need to pass the journal entry pertaining to this application stage, allotment stage, and first and final call. Okay, so when it comes to application stage, the first entry will be for what? The first entry will be for receipt of application money. Okay, so receipt of application money. Always remember, whenever you're passing the journal entry, you need to look from the perspective of the company, because we are passing these journal entries, okay, in the books of the company. Okay, so that's why you need to always remember that while passing the journal entry, you need to look from the perspective of the company. Clear? Okay, so first entry will be what? The first entry would be like this. Bank account debtor, so this would be to the extent of 12 lakh shares. Okay, so 12 lakh into 2. Why is it 2 rupees? Because application money is just 2 rupees. Okay, so 12 lakh into 2, this would be 24 lakh. To what? To share application account, 24 lakh. This would be the first entry. Clear? Okay. So after this, okay, so this is the entry which I have passed for receipt of this application money. So what about the next entry? I need to refund the excess application money. Okay, so the next entry would be for refund of excess application money. The company issued 10 lakh shares, whereas public, okay, were willing to subscribe to the extent of 12 lakh shares. So how much is the oversubscription in this case? Yes, how much is the oversubscription? In this particular situation, the oversubscription is how much? 2 lakh shares. So what am I supposed to do with these 2 lakh shares? I just need to refund it back to the shareholders. Okay, so what I need to do, I just need to refund this. So the entry will be exactly reversal of this. Okay, so whatever entry we have passed it over here, this is the entry for receipt of this particular application money. Okay, so if I want to refund this application money, the entry will be exactly reversal of the same. Okay, so let's have a look into it. Yeah, so I just need to reverse this particular entry. So the entry would be like this: share application account debit, 2 lakh is the excess application which I had received. So 2 lakh into 2, this would be like 4 lakh to what? To bank account, because I'm refunding the amount. Now whenever I pay any amount, I'll have to credit the bank account. Any amount which you receive, debit bank account. Any amount which you pay, credit bank account. You guys will be aware about this particular stuff. Now after this, all we need to do is how much is the balance amount which I need to transfer it to share capital. Now look at this, just compare these two journal entries. Okay, so have a knowledge about this. Instead of literally preparing the ledger, straight away have a look at these two journal entries. Share application, here it was showing a credit balance of 24, here I debited. A particular ledger which was showing a credit balance of 24 lakh, I have shown 4 lakh rupees on the debit side. Now what would happen? Out of 24, I've shown 4 lakh rupees on the opposite side. It means this value, that is 4 lakh rupees, will get deducted from it. Okay, if I would have shown 4 lakh rupees on the credit side, it would have got added to the value. Okay, 24 plus 4. But what is happening over here? Share application account was showing a credit balance of 24. I debited to the extent of 4 lakh. It means I'm reducing from the ledger. Now how much would be the balance amount in this share application which I need to transfer to share capital? Out of 24, eliminate 4. Okay, so 20 lakh is the amount which I need to transfer to share capital. Okay, so the next entry will be transfer share application money to share capital. Okay, so what would be the entry? The entry would go like this: share application account debit. Okay, so either you can compare 24 and 4, or straight away out of 12 lakh, 2 lakh rupees I have already refunded. So 10 lakh shares is the right shares for which I need to transfer it, okay, to the share capital. So 10 lakh into 2, this would be like 20 lakhs to share capital. This would be the entry. Is this clear? So we are done with passing the journal entries pertaining to application stage. Now from the second stage and then onwards, all you need to do is just pass the due entry first and then the receipt entry. As simple as that. Okay, so allotment stage, we just need to pass the due entry and then the receipt entry. Okay, so first thing will be the due entry. Now tell me, on how many shares the allotment money is due? Will it be 12 lakh shares or will it be 10 lakh shares? Yes, although public applied for 12 lakh shares, am I actually making an allotment for entire 12 lakh shares? No. Okay, out of 12 lakh, to the extent of 2 lakh, we have already refunded the excess application money. Only to the extent of that 10 lakh allotment would actually happen. Okay, so company will be making an allotment only to the extent of these 10 lakh shares. Okay, so the due entry will be what? You guys already know it. Okay, so share allotment account debit. This will be to the extent of only 10 lakh shares. Okay, and how much is the allotment stage amount? You guys can refer to this. Allotment and first call, it is 4 rupees each. Okay, so due entry will be 10 lakh into 4. This would be 40 lakhs. To what? To share capital. This would be again 40 lakh. This would be the entry, the due entry for allotment money. Now what would be the receipt entry? When we actually receive the amount. Okay, so At the time of allotment stage, the entry would be like this: bank account debit, any receipt entry for that matter. Okay, so whenever we are receiving this particular amount, we just need to debit the bank account. They have clearly mentioned, if you guys just go through the question, all the amounts were duly received. So they have clearly mentioned at the end that entire amount was already received. Okay, so there was no arrears. Okay, so don't worry when it is calls in arrears or if it is calls in advance, what treatment are we supposed to do? Don't worry as of now. Okay, so here they have clearly mentioned that all the money was duly received. Okay, so this entire 40 lakh pertaining to allotment stage money is received. So bank account debit to share allotment account, 40 lakh. Okay, so this has been received. Now we need to pass the entry for call money stage. Okay, so the last stage would be call money stage. Same thing, we'll have to repeat it. Okay, so we'll have to just duplicate it. Instead of calling it as share allotment, we'll just be calling it as share first and final call. Okay, so we just need to pass the due entry and then the receipt entry. Everything would be same, guys. Okay, so look at this. If you want, I'll just copy and paste over here. Now look at this. What and all things will I be changing? Due entry, instead of calling it as share allotment, we'll be calling it as what? Share first and final call. Okay, share first and final call account. Okay, share first and final call account, again 10 lakh into 4 rupees to share capital account, 10 lakh into 4. Okay, so this would be the due entry. And what about receipt entry? And again, when it comes to receipt entry, earlier it was bank account debit to share allotment. Here, instead of calling it as share allotment, I'll be calling it as to share first and final call. Okay, so the share allotment will get replaced by share first and final call. Clear? Hope you guys understood this. Any doubt, any confusion? Simple, right? So same entry is what they would have passed over here. Okay, so look at this. Bank account debit to share application. Okay, so look at the number of shares for which they have passed the entry. 12 lakh shares. Remember I told you over here, it's a mistake what they have done. This should have been again for 12 lakh shares into 10, which would have been 120 lakh. Okay, but instead of that, they have just kept it as 10 lakh, which is wrong. Okay, so this is a mistake which is there in your study material. Okay, now look at this particular illustration. Okay, so here they haven't done any mistake. So 12 lakh shares into 2. Okay, so this would be like 24 lakhs. Okay, so this would be 24 lakh. The next entry is for what? This is the entry for refund of the excess application. To the extent of 2 lakh shares we have received in excess. Okay, we need to refund this amount back. So the entry will be exactly reversal of this. Okay, share application account debit to bank account. So 2 lakh is the excess application which we have received. 2 lakh into 2, this would be 4 lakh and 4 lakh. Clear? And then the balance 20 lakh rupees is what we are supposed to transfer it to share capital. The same entries, guys, whatever we have passed over here. We'll find exactly the same entry. Look at this. Share application to share capital 20 and 20. Look at this. Share application account debit to share capital 20 and 20. No changes at all. Clear? And again in the examination, make sure you write the narration. Okay, so whatever is the transaction, you guys can pass the narration. Suppose if I want to pass the narration for this, being receipt of application money, okay, being refund of excess application money received, being transfer of application money to share capital, being allotment money due, okay, being receipt of allotment money, okay, being call money due, okay, being receipt of call money. If you just mention a simple narration, that would be self-sufficient, or it would be more than sufficient. Okay, so examiner, what he'll be checking is whether narration is available or not. So he'll not be looking that the same narration which is available in your study material should be available in your paper. No. Okay, so in simple words also, if you just write the narration, that would be more than sufficient, but make sure that you write the narration in the examination. Clear? Okay. And then when it comes to allotment stage, okay, allotment stage, that is second stage and then onwards, all we need to do is just pass the due entry first and then the receipt entry. Okay, so what would be the due entry over here? The due entry will be share allotment account debit to share capital. Okay, so that is 40 lakh and 40 lakh. And finally, when we actually receive this amount, bank account debit to share allotment, 40 lakh and 40 lakh. Clear? Same thing will hold good even for call money stage. Okay, share first and final call account debit to share capital, 40 lakh and 40 lakh. And then when we actually receive this amount, bank account debit to share first and final call, 40 lakh and 40 lakh. Look at this. We have passed exactly the same entries, guys. Clear? No changes at all. Okay, so once you guys are strong with the concept, okay, every illustration you guys will be knowing what exactly is the entry which we are supposed to pass. Okay, and the logic behind each and every journal entry. Is this clear? Hope this is clear. Okay, so that's all pertaining to this illustration number 2. Okay, now let's move on to the next concept, that is issue of shares at premium. Okay, few important points what you need to remember. I'll just tell you that. Just try to remember those stuff, more than sufficient. Okay, so what is premium? We've already discussed the meaning of this particular situation. Now whenever the issue price is greater than the face value, 10 rupees share, if you are issuing it at 12 rupees or 14 rupees, it would be treated as what? It would be treated as if the shares are issued at premium. Okay, so let's look into the information which is given in your study material. A company may issue the shares at premium, that is the value greater than the face value. Whenever the issue price is greater than the face value, it would be treated as if the shares are issued at premium. Okay, so the power to issue shares at premium need not be given in the articles of association. Premium so received shall be credited to a separate account called as securities premium account. Okay, so this particular premium, the excess amount, 10 rupees share, if we are receiving 12 rupees, this 2 rupees per share. Okay, so this will be transferred to a separate account called as securities premium account. Now what are we supposed to do with the securities premium account? All these stuff you need not worry. Are we supposed to debit or credit? Don't worry as of now. I'll just tell you a simple logic. Okay, so whenever I teach you the journal entry, okay, as of now just remember this much, that whatever is the excess amount what we are receiving, that will be transferred to a separate account called as what? Called as securities premium. Clear? Okay, so look at this. Section 52 of Companies Act 2013 gives the purpose for which the share premium or securities premium account may be applied. Okay, for issue of fully paid bonus shares. Now this balance whatever is available in the securities premium, for what and all purpose this money can be used. Okay, that is what has been mentioned over here. So this amount can be used for the purpose of issuing bonus shares. Remember right shares and bonus shares. So when it comes to bonus shares, will the company be receiving any kind of consideration? No, right? Company will never be receiving any kind of consideration when it comes to bonus shares. Okay, so what is right shares? Right shares are nothing but the new shares which will be offered to the existing shareholders at a price which is lesser than the prevailing market price. Okay, so initial offer will be given to the existing shareholders. Okay, so before the shares are issued to the general public. Okay, so the offer will be made to the existing shareholders. That is what is right shares. Okay, and then when it comes to bonus shares, what happens in case of bonus shares? So in case of bonus shares, the company will be issuing the shares to the existing shareholders free of cost. Okay, that is without consideration. The company will not be collecting any sort of money from the shareholders. Okay, so free of cost the company will be giving some additional amount of shares to the existing shareholders. Okay, so whenever the company is issuing this bonus shares, the balance in the securities premium can be used. Okay, the next thing is for writing of preliminary expenses. Okay, now whenever I need to write off this preliminary expenses, okay, I can use this particular securities premium. Now what is this preliminary expenses? Yes, what's the meaning of this? So these are nothing but the expenses which was incurred. Okay, so before incorporation. Now before the company was incorporated, the company would have spent certain amount towards printing of this particular prospectus or printing of memorandum or articles of association. Okay, so they would have paid the professional fee. All these amount will be treated as what? Preliminary expenses, that is pre-incorporation expenses. Okay, so in order to write off these pre-incorporation or preliminary expenses, this securities premium can be used. Okay, then the third purpose for which it can be used is for writing off the expenses of the commission paid or discount allowed on any issue of shares or debentures of the company. Now this particular securities premium can be used in order to write off the expense of commission paid or discount allowed. Okay, now at the time of issue of shares, if the company is paying some commission, okay, these kind of commissions will be written off. Okay, in order to write off this particular commission or the discount, okay, the securities premium can be used. The next purpose is for providing premium payable on redemption of any redeemable preference shares. Now you know what is redemption, right? Remember morning or in the previous class we discussed about redeemable preference shares. So what are these redeemable preference shares? These are the shares which will be repaid after a certain period of time. Now redemption can happen either at par, premium or discount. Okay, so 100 rupee share I can repay exactly 100, or 100 rupee shares I can repay 120. Okay, so that 20 rupees of excess which I am paying, okay, so that would be called as premium on redemption of preference shares. Okay, so the extra amount what I am supposed to pay, this premium, that is securities premium amount, can be used. Okay, when I issued the shares, let's say I collected 5 rupees in excess. Okay, at the time of redemption I am paying some extra premium. Okay, now let us say 100 rupees share was issued at 105. Okay, 5 rupees is securities premium which I collected. Now redemption, 100 rupees share is being redeemed at 102. Okay, so this 2 rupees, okay, in order to pay this excess 2 rupees at the time of redemption, the 5 rupees which I had collected initially, okay, at the time of issue can be used. Clear? The last purpose is for the purpose of its own share, okay, or other securities. Okay, not relevant or not much important. So they have just given you the list, okay, of purposes for which the securities premium can be used. So whatever is the balance in securities premium, it can be used for various purposes. Like what? Like issue of this particular bonus share. Okay, and the second purpose is in order to write off the preliminary expenses, in order to write off the discount, okay, or commission which is paid with respect to issue of shares, in order to pay the premium at the time of redemption. Okay, so these are the purpose for which the securities premium can be used. Clear? Okay. Now let me tell you, okay, the journal entry with respect to premium. Okay, so premium can be included either at application stage, allotment stage, or call money. So in the question or in the illustration, they'll clearly be mentioning, okay, whether premium is included in application stage, allotment stage, or first and final call stage. 90% of the cases, the securities premium will be collected at the time of allotment stage. Okay, so 90% of the cases, this particular premium will be available in the allotment stage. Now, what are we supposed to do with this particular premium? Always remember that share capital will be representing the nominal value or face value. Share capital should always be represented at nominal value or face value. Okay, so if I'm issuing, okay, so let's say, okay, so let us say 10,000 shares of rupees 10 issued at rupees 12. What will be the total share capital in this case? So 10,000 shares of rupees 10, I am issuing it at 12 rupees. So is the share issued at par, premium, or discount in this particular situation? Yes. This is clearly a scenario or situation wherein the shares are issued at premium, because the issue price, which is 12 in this case, this is greater than the face value. Okay, so 10 rupees share is being issued at 12 rupees. Okay, now what am I supposed to do? Look at this. This will be divided into two things. Okay, so one will be share capital, another would be securities premium. Clear? Now in this case, how much is the amount pertaining to share capital? Always remember, share capital, okay, will be representing the nominal value or face value. In this case, the nominal value or face value is what? It is this 10 rupees. Okay, so 10,000 shares into 10 rupees. Okay, that would be 1 lakh. This 1 lakh will be transferred to share capital. And what about securities premium? 10,000 shares into 2 rupees. Okay, that is 20,000 rupees. This is the amount which will be transferred to securities premium. Is this clear? So in my balance sheet, share capital will be shown to the extent of 1 lakh and securities premium will be shown to the extent of 20,000 rupees. Clear? Now, when it comes to this particular stuff, okay, securities premium, what are we supposed to do? Okay, so let me just tell you what exactly are we supposed to do with the securities premium. Wherever you come across this particular share capital, the securities premium should be given effect in that particular journal entry. Okay, if you just have a look at the journal entries what we have discussed, so the entry wherein I give effect to share capital, okay, look at this. When I receive the share application money, am I giving any effect to share capital? No. Okay, I'm debiting bank account and I'm crediting share application account. Share capital is nowhere forming part of this particular entry. But look at this entry. This is the entry wherein I'm giving effect to share capital. Okay, so in which entry you guys will be having a confusion whether I need to be giving effect to the securities premium while passing the due entry or while passing the receipt entry. So wherever you find across or you come across this particular share capital, securities premium should be attached over there. Okay, so it is as good as a kind of tail. Okay, so wherever this particular dog goes, okay, the share capital, the tail follows. Okay, so wherever you write this particular share capital, okay, it is that particular entry in which you need to give effect to securities premium also. Okay, now you will be having a confusion. Now let's say securities premium is being collected at allotment stage. Okay, let me give you, or let's take the same example. 10 rupees share, it has been issued at 12 rupees. Okay, 12 rupees is the issue price, 10 rupees is the face value. Okay, so you clearly know that this particular share is issued at premium. Okay, so when it comes to application stage, let's say 2 rupees was received. When it comes to allotment stage, so let's say 6 rupees was received. Okay, so this includes securities premium. Okay, and what about first and final call? So first and final call, 4 rupees will be received. So here they have clearly mentioned that this particular securities premium is included where? It is included in the allotment stage. Okay, now allotment stage and then onwards, you guys know that we need to pass the due entry first and then the receipt entry. Correct? So you guys will be having confusion whether I need to give effect to this securities premium while passing the due entry, or should I be giving effect to this securities premium while passing the receipt entry. Okay, which is the entry wherein you give effect to share capital. Okay, so don't you think you'll be giving effect to share capital while passing the due entry? Look at this. This is the entry wherein you come across share capital. Receipt entry, you don't have any share capital. Okay, so wherever you come across this share capital, okay, in that particular entry only you need to credit this securities premium. Always remember, this securities premium has to be credited. Okay, so here out of this 6 rupees, okay, so how much is the amount which will be transferred to share capital and how much is the amount which will be transferred to securities premium? Securities premium, 10 rupees share, if it is issued at 12 rupees, 2 rupees will be the securities premium. Okay, and the remaining 4 rupees is what will be transferred to share capital. Is this point clear? Hope you guys understood this. Securities premium we always need to credit. The immediate next question would be, in which entry? Is it while passing the due entry or is it while passing the receipt entry? Okay, wherever you come across share capital, okay, so it is that particular entry wherein you need to give effect to this securities premium. Clear? Because whenever we are transferring, we need to be knowing how much is the amount which we need to transfer to share capital and how much is the amount which we need to transfer to securities premium. Okay, so remember, I told you share capital will always be representing the nominal value. This entire 2 rupees will be transferred to share capital. Over here 4 rupees will be transferred and over here 4 rupees will be transferred. If you add these three, 2 plus 4 which is 6, 6 plus 4 is 10. Share capital will always be representing the nominal value or face value. Hope this is clear. Any doubt, any confusion? Did you understand this? Clear? Okay. So securities premium is just as good as some kind of extra amount what we are receiving. Okay, so therefore we'll be crediting this securities premium. Okay, so look at this. They're given you the journal entries. Okay, so wherever you come across this share capital, look at this, wherever you come across share capital, the securities premium will be followed over there. Okay, and you know that just like how we credit the share capital, even the securities premium has to be credited. Okay, the journal entries, whatever we discussed guys, the basic journal entries, same journal entry will be holding good even in this case. Only thing which you need to know is securities premium, should I debit or credit? You know that it has to be credited. The immediate next question is, when exactly should it be credited? Okay, depending upon whether the premium is included in application stage, allotment stage or call money stage, and wherever you find or you come across this particular share capital, it is that particular entry in which you need to give effect to this securities premium. Is this clear? Okay, so let's have a look at this illustration number 3 straight away. AB & Co Limited issued, okay, so this is 5 crore equity shares of rupees 10 each at a premium of 4 rupees. So what would be the issue price? 10 rupees share. If I am collecting extra 4 rupees, okay, so what would be the issue price? 14 rupees will be the issue price. And how much is the number of shares which I am issuing? 500 lakh, which is nothing but 5 crores. Okay, so payable, okay, on application. Okay, so the entire amount is payable on application. They have clearly mentioned that entire 14 rupees is collected at application. Okay, so the shares were all subscribed and all the money was received. Give the journal entries to record the above transaction. Very simple illustration. They're just asking us to pass the journal entries. Okay, so let's just pass the journal entries. So here if you guys closely observe, the entire amount is collected, okay, in one shot. Okay, that is at application stage itself. Okay, Now the first entry would be when I receive the application money. What would be the entry? The entry would be like this: bank account debit. How many shares were issued? Yeah, 5 crore shares were issued at rupees 14. Okay, so this would be 5 crore is as good as 500 lakh. So 500 lakh into 14. How much would that be? Yeah, this would be 7,000 lakh. Okay, which is almost 70 crores. Okay, so bank account debit 500 lakh into 14. Okay, so this would be 7,000 lakh to share application account, the entire 7,000 lakh. Now the immediate next entry would be what? The next entry would be with respect to transferring the amount to the share capital. Now out of this particular amount, we should be knowing how much is the amount which need to be transferred to share capital and how much is the amount which need to be transferred to securities premium. Okay, so here the issue price was how much? The issue price was 14 rupees. Now out of this 14 rupees, okay, so how much is the amount which will be transferred to share capital? Share capital will be transferred to the extent of nominal value or face value, okay, which is 10 rupees. And what about the remaining amount? The remaining amount will be transferred to securities premium, okay, that is 4 rupees will be transferred to securities premium. Clear? Okay, now the next entry is for transferring the amount, okay, out of this 7,000 lakh, how much money am I going to transfer to share capital and how much is the amount which I'll be transferring to securities premium. Okay, so let's pass the journal entry for this. The normal entry you guys already know, okay, share application account debit 7,000 lakh to share capital. Now in this case, I'll not be transferring the entire amount to share capital. Okay, so out of this 500 lakh, I'll be transferring only to the extent of nominal value. Okay, so what's the nominal value? The nominal value is 10 rupees. Okay, and what about the remaining amount? Remaining amount will be transferred to securities premium. To securities premium account. So out of this 14 rupees, 4 rupees will go to securities premium. Okay, so this would be what? This would be 2,000. Clear? If you just have a look at the solution, look at the entry. Do you find the same? Bank account debit to share application account 7,000 lakh, 7,000 lakh, and then when I'm transferring the amount to share capital, I'll be transferring only to the extent of face value or nominal value. Okay, so share capital account will always be representing the face value or nominal value. Okay, so look at this. Share application account debit 7,000 to share capital. Okay, so it is just 5,000. How did we get this 5,000? So 500 shares into 10 rupees. Okay, so that's how we got this. Look at this. 500 lakh shares into 10 rupees, because 10 rupees is the nominal value or face value, and when it comes to this 4 rupees, okay, so 4 rupees is the securities premium that will be transferred to separate account. Okay, so to securities premium 2,000 lakh. Is this clear? Hope you guys understood this. Any doubt, any confusion? Clear about this illustration number 3? Clear? Only thing is this entire amount was received at application stage itself. So that's why we did not pass any journal entry pertaining to allotment stage and call money stage. Okay. Now look at the next thing. Shares issued in installment. Okay. Now whenever the company is receiving the amount in installment, at that point of time, let us understand what exactly would happen. Okay. Okay. So let's have a look into this. So shares issued in installment. Okay, on receipt of the application money is the same entry, guys. Okay, so bank account debit to share application. For excess application money refunded. Okay, reversal of this entry. Share application to bank account. Now for share application money, when it is transferred to share capital, you guys already know share application account debit to share capital. For allotment money which is due, always remember whenever you come across this particular share capital, okay, so the securities premium has to be given effect in that particular place. Okay, so for share allotment money which is received, okay, so bank account debit to share allotment, if at all the securities premium, okay, if it is included in share first and final call, okay, so whenever we are passing this due entry, it is that point of time wherein we need to give effect to securities premium, because Due entry is the one wherein we give effect to share capital. So wherever you come across share capital, that is the place wherein you need to be giving effect to securities premium also. Clear? Okay, then when this share first and final call money is due, you guys already know, okay, share first and final call account debit to share capital. When this amount is actually received, okay, so bank account debit to share first and final call. Okay, so they would have given an illustration pertaining to the situation, that is whenever the company is issuing the shares at premium and when this particular amount is received in installment, okay, what exactly will be the accounting treatment. Okay, so let's look into this. So let me just read this illustration number 4. CD and Co Limited issued, okay, so again it is like 5 crore equity shares of rupees 10 each at a premium of 4. Okay, so obviously the issue price would be what? 10 rupees share is being issued at 14 rupees. That 4 rupees will be the securities premium. Okay, so payable 1 rupee per share on application. So application stage money is 1 rupee. 6 rupees per share on allotment including premium. So premium is included in which stage? So in this particular situation, premium is included in allotment stage. Okay, 3 rupees on first call and the balance on final call. Okay, so here 2 calls are being made. So first one you cannot call it as first and final call. Okay, because even after that another call is being made. Okay, so first call, instead of calling it as first and final call, we'll be calling it just as first call, and then okay, so second call will be calling it as second and final call. Okay, the shares were all subscribed and all the money due was received. Okay, so they have clearly mentioned that entire amount was received. Give the journal entries to record the above transaction. They're just asking us to pass the journal entries. Okay, so let's just pass the journal entries. So with respect to the entries wherein we are receiving the amount, what they have done is they have straight away given effect in the cash book. Okay, so straight away they have given effect in the cash book. Okay, so I'll just pass the journal entry for each and every transaction. Okay, so here how many shares are issued? 500 lakh shares. Okay, so 500 lakh shares of rupees 10 are issued at 14. So 4 rupees will be premium. Okay, so how much is the securities premium in this case? So issue price is 14. Okay, so issue price is 14. So here they have clearly mentioned how much is the application money, how much is the allotment money, how much is the first call money, and how much is the second and final call money. Okay, so application money is 1 rupee. Allotment money, they have mentioned it as 6 rupees. Okay, so then we have got first call, second and final call. Okay, so how much is the amount which we are receiving at the time of application? They have clearly mentioned that 1 rupee per share on application, 6 rupees per share on allotment including premium. Okay, so 6 rupees, this is including premium. Okay, so including premium. Now out of this particular 6 rupees, how much money will be transferred to share capital and how much is the amount which will be transferred to securities premium? Okay, so to the extent of how much is the premium over here? 10 rupees share, if I'm issuing it at 14 rupees, 4 rupees will be the premium. So this 4 rupees will go on to the securities premium account and the balance 2 rupees is what will be transferred to share capital. Clear? Okay, now when it comes to first call, how much is the amount which will be receiving at first call? Look at the question. 3 rupees on first call and the balance on second and final call. Okay, so out of 14 we have already received to the extent of 6, 7, 8, 9, 10. 10 rupees is already collected till this particular point of time. So balance 4 rupees will be collected at second and final call stage. Clear? Okay. Now all we need to do is just pass the journal entry with respect to all these 3 stages. Okay, so this would be a single stage. Okay, so this both put together will be called as call money stage. So here 2 calls is being made by the company. First call to the extent of 3 rupees, second and final call to the extent of 4 rupees. Okay, now Let's pass the journal entry for the same. First entry will be when I'm receiving the application money. Okay, so what will be the entry when I'm receiving the application money? The entry will be bank account debit. How many shares? 500 lakh into how much am I receiving? 1 rupee. Okay, so bank account debit 500 lakh into 1, this would be 500 lakh to what? To share application account. This would be the first entry. Okay, so bank account debit to share application account 500 lakh 500 lakh. The next thing would be, what am I supposed to do with this application money? Don't you think this has to be transferred to share capital? So what will be the next entry when I'm transferring this 500 lakh to share capital? The entry would be like this: share application account debit 500 lakh to share capital. Clear? To share capital 500 lakh. Okay, this would be the next entry. So these are the two entries pertaining to application stage. Okay, when it comes to allotment stage and then onwards, all we need to do is what? We just need to pass the due entry first and then the receipt entry. Okay, so this is pertaining to application stage. Okay, so when it comes to allotment stage, all I need to do is just pass the due entry, okay, and then the receipt entry. Now what would be the due entry? Look at this. How much is the total amount which is due at allotment? 6 rupees is what is due at allotment. Out of the 6 rupees, 4 rupees is my securities premium, and then okay, so 2 rupees is the amount belonging to share capital. Now be careful while passing this entry. Okay, I told you that whenever we give effect to share capital, that is the place wherein we need to give effect to securities premium. So both share capital and securities premium should be given effect in the same journal entry. Now normally what would be the journal entry for allotment money due? The entry will be share allotment account debit to share capital account. Okay, so here along with this we'll just be extending the entry a bit. Okay, so share allotment account debit to share capital to securities premium. Okay, so the entry would be like this: share allotment account debit 500 lakh is the total number of shares, and how much is the total amount which is due at allotment? It is 6 rupees, right? So this would be 3000 lakh to what? To share capital account. Now be careful over here. Share capital will be representing to the extent of nominal value. Okay, how much is the nominal value? If you see over here, out of 6 rupees, 4 rupees is the securities premium, 2 rupees will be the nominal value. Okay, so to share capital, this would be to the extent of 1000 lakh. Okay, and then to securities premium. So how much is the premium over here? 10 rupees share. If I am collecting 14 rupees, 4 rupees will be the premium. Okay, so 500 lakh into 4, this would be 2000 lakh. This would be the securities premium. Is this clear? So this is the entry what I'll be passing when the allotment money is due. Okay, so they have clearly mentioned that all the amount was actually received. Okay, so it was actually received. So when I pass this particular receipt entry, okay, so receipt entry, you guys already know the receipt entry, right? Whenever I receive any amount, bank account is the one which will be debited. Okay, so the entry would be what? The entry would be like this: bank account debit 3000 lakh to share allotment account 3000 lakh. Okay, so this entire amount whatever was received, this amount, okay, so this will be the entry when I receive the amount. Okay, this is the entry which I'll be passing when I receive the amount. So entire 3000 lakh rupees was due. When I actually receive this entire 3000 lakh, the receipt entry will be what? It would be bank account debit to share allotment account. Okay, simple. After this, the next stage would be call money stage. Call money stage, again simple thing, we just need to pass the due entry and the receipt entry. So what would be the due entry? Share first call. Okay, so this would be the due entry. share first call account debit 500 lakh shares into, what is the amount which is due at first call? I think first call it is 3 rupees. Look at this, 3 rupees is the amount which is due at first call, and second and final call it would be 4. Okay, so 500 lakh into 3, this would be what? This would be like 1500 lakhs. To share capital account. Now you need not give effect to securities premium, because securities premium has already been included in the allotment stage and we have already given the accounting treatment for the same. Okay, so then the receipt entry, they have clearly mentioned that all the amount whatever was due has been received. Okay, so what will be the receipt entry? So receipt entry would be like this: bank account debit, the entire 1500 lakh rupees would have been received to share allotment, sorry, share first call account. Clear? Okay, now same way. Okay, so the entry for share second and final call. Okay, so we'll just be passing similar entry. Okay, so here again new entry. So instead of calling it as first call, here we'll be calling it as what? To share second and final call. Okay, and what was the amount which was due? They have clearly mentioned that the balance amount, okay, which is 4 rupees. So 500 into 4, this would be 2000 lakh to share capital. This would be the entry. When I actually receive, okay, so what will be the entry? The entry would be like this: bank account debit, okay, so 2000 lakh to share second and final call. Is this clear? So bank account debit to share second and final call, 1500 lakh, 1500, sorry, 2000 lakh, 2000 lakh. This would be the entry. If you just have a look at the study material, the same entry they would have passed. Okay, just go through it. So only thing what they have done is, instead of passing the journal entry, okay, so wherever the amount was actually received, they have given effect in the cash book. Look at this. This is as good as your bank account. So bank account debit, okay, to equity share application account 500 lakh. This is our first entry, right? See, wherever it is bank account, okay, so they have given effect straight away in the cash book. Bank account debit to share application 500 lakh, 500 lakh. And look at this, bank account debit to equity share allotment account 3000. Look at this. Bank account debit to equity share allotment account 3000 lakh, 3000 lakh, same thing. Okay, and then nextly they would have passed the entry for this bank account debit to share first call. Look at this, to equity share first call to the extent of 1500, same amount 1500. Okay, and lastly bank account debit to equity share second and final call 2000 lakh. Look at our amount, bank account debit to share second and final call. Don't you think it's the same thing? And whatever is the next thing, okay, so we would have passed the journal entry for each and every transaction. What they have done in your study material is the amount, okay, relating to bank account, it is straight away transferred to the cash book. Okay, so instead of passing the journal entry, they have clearly transferred, or they have straight away transferred it to your cash book. Okay, so nothing wrong if you pass the journal entry for each and everything. Okay, now look at the next thing. So with respect to transferring the application money to share capital, share application account debit to share capital 500 lakh. Look at this. Do you find the same entry? Share application account debit to share capital 500 lakh. Okay, so for allotment, the due entry, look at this entry: share allotment account debit to share capital 100 lakh to securities premium 2000 lakh. Do you find the same entry over here? Equity share allotment account debit to equity share capital 1000 lakh to securities premium 2000 lakh. The same thing is what we have also written. Okay, and then finally when this particular share first call money is due and share second and final call money is due, look at this: equity share first call account debit to equity share capital account, equity share second and final call account debit to equity share capital account. Nothing would change. Okay, exactly the same entries. Hope you guys understood this. Clear? Any doubt, any confusion so far? So always remember, securities premium is the excess amount what we receive over and above the face value. Where are we supposed to give effect? Depending upon what stage it has been included. Is it included in application stage? Is it included in allotment, or is it included in the call money stage? Okay, and then again when it comes to allotment and call money stage, we have got two entries, due entry and receipt entry. So wherever you come across this share capital, okay, so that is the place wherein you need to be giving effect to securities premium. Just like how we credit the share capital to the extent of face value or nominal value, the excess amount, that is the premium amount, will be transferred or credited to this particular securities premium. Okay, so wherever you find the share capital, okay, so this securities premium will be added over there or inserted over there, as simple as that. Is this clear? Any doubt, any confusion so far? Hope you guys understood this. Okay, so let's take a small break. After the break, we shall start with this calls in arrears. Okay, so let's take a small break. Okay, so let's talk about what exactly is this calls in arrears and what exactly is this calls in advance. Okay, so you need not worry about discount. Okay, so remember I told you company can issue the shares either at par or premium. Okay, so we have already covered these two aspects. Okay, so what will be the situation when the company is issuing the shares at par, and what exactly will be the situation when the company is issuing the shares at premium? Now let's talk, okay, about calls in arrears and calls in advance. Okay, so what do you understand by this particular term, arrears? So what is arrears? Arrears is something which is pending amount, right? Correct. So arrears is something which is pending. Okay, so let me tell you what is this calls in arrears and what is this calls in advance. Remember called up capital? I told you that the company will be making a reminder to the shareholders that so and so amount is due from you. Okay, now in spite of continuous reminder, okay, so even after continuous reminder, if the shareholder is not making the payment, okay, so that would be treated as what? That would be treated as calls in arrears. Okay, so what is calls in arrears? So in spite of continuous reminder by the company, if the shareholder fails to pay the amount, okay, so that would be treated as calls in arrears. Now what is calls in advance? So calls in advance is something which the shareholder will be making the payment even before the company is making reminder for it. Now let us say at the time of allotment only, the shareholder is not only paying the allotment stage money, but also he is paying the amount relating to share first and final call. The company has not even called for the share first and final call. So at the allotment stage itself, he paid the allotment money as well as share first and final call. So the amount whatever he is paying in advance, that would be treated as what? That would be treated as calls in advance. Is this clear? Hope you guys understood this. Okay, so let me just tell you this. So we have got calls in arrears and we have got calls in advance. Okay, so calls in arrears, and the second thing is calls in advance. Okay, so let us understand what exactly is this calls in arrears and what exactly is this calls in advance. So what is arrears? In spite of continuous reminder also, if the shareholder fails to make the payment, okay, so that is what is called as calls in arrears. Okay, so the shareholder fails to pay the amount in spite of continuous reminder. Okay, so this is calls in arrears. Now what about calls in advance? So here the shareholder pays the amount in advance, that is even before the call is being made. Okay, so even before the call has been made. So before even reminding, okay, so before even reminding only, the shareholder would have paid the amount. Okay, so that would be treated as calls in advance. Now you need to look from the perspective of the company, okay, and tell me which is an asset and which is a liability. Yes, think of it. Okay, so here the company is supposed to receive some amount. Okay, the company is supposed to receive some amount. When I say calls in arrears, the company is entitled to receive the amount. In spite of continuous reminder, the shareholder is not paying. Don't you think this is nothing but the amount which is receivable for the company? Now, any receivable for the company, will it be an asset or liability? Debtors for that matter, okay, it is as good as receivable, right? I sell the goods to you guys, I'm supposed to receive the amount from you, okay? So you become my debtor, okay? I'm supposed to receive the amount from you. So debtors will always be an asset. Always remember, any receivable is always an asset. Any payable, if I'm supposed to pay the amount to somebody, that becomes my liability. Now let us say I've taken a loan from the bank, I need to repay it back to the bank, so this becomes my liability. Any receivable is always an asset, any payable is always a liability. Clear? Now what about this calls in arrears? Is it receivable or payable? Now let us say the company is supposed to collect 10 rupees per share. Okay, so out of this 10 rupees, 8 rupees is already been collected. Remaining 2 rupees, the company had made a reminder, okay, so to receive, but it has not received. So what do you think? Is this receivable or payable? So calls in arrears is as good as receivable. Okay, so this is an asset. Any receivable will be an asset. And what about an asset? Does it show a debit balance or credit balance? Asset will always be showing a debit balance. Therefore, this particular calls in arrears, we just need to debit it. Okay, so calls in arrears, what are we supposed to do? We just need to debit it. Okay, so we just need to debit it. Clear? And when it comes to calls in advance, see, I haven't made a reminder yet, okay, but the shareholder has paid me the amount in advance, okay. So even before even making a reminder, he has paid the amount in advance. So this would be as good as a kind of liability. So until and unless, okay, so until and unless, okay, so I actually make a call, this would be treated as liability. Let me give you a simple example. Now let us say you guys are running a gold or a jewelry showroom, okay, you guys are running a jewelry showroom, okay. One of the customer, he came, okay, and he's placing an order for a customized necklace, okay. He's telling that I want the necklace in so and so pattern only, okay, in this particular form only. So what you will be doing as a showroom manager is, or as a showroom owner, let's say, what you will be doing is you will be collecting some advance amount from him. Okay, so what are you doing? Even before even delivering this particular product, you are collecting this particular advance amount. Let's say the price of that particular necklace will be close to 20 lakh rupees. You tell the customer that, boss, I'll prepare and give you this particular necklace as per your prescription. Okay, but you do one thing, you pay me 5 lakh rupees as advance. Okay, the remaining amount when you're taking the delivery, you can pay it. So this 5 lakh rupees which you're collecting from the customer before even selling the goods to him, so will it be asset for you or will it be liability for you? It is always a liability. Okay, so the advance amount whatever you collect from your customer is as good as a liability, because tomorrow, let's say, okay, he rejects for that goods, okay, you will be deducting whatever are the charges, the remaining amount you are supposed to pay back to him. Okay, so that's why it would be considered as a liability. Same would hold good even in this case. Okay, so before even making a call, okay, the shareholder has paid the amount to me. Okay, so till the time I actually make the call, it would be my liability or obligation. Okay, and any liability, you guys know that it will be showing what? It will be showing credit balance. So what do you understand from this? When it comes to calls in arrears, we just need to debit it. Okay, when it comes to calls in advance, we just need to credit it. Okay, if you remember this much, more than sufficient. Okay, then the next thing is, in which entry am I supposed to debit this calls in arrears, or in which entry am I supposed to credit this calls in advance? Should I be giving effect while passing the due entry, or should I be giving effect while passing the receipt entry? Think of this for a while. Yes, my question is very simple. So securities premium, I told you, okay, so wherever you come across share capital, that is the entry wherein you need to give effect to the securities premium. Same way when it comes to calls in arrears and calls in advance, you understood that when it comes to calls in arrears, it is receivable, we need to debit it. Same way when it comes to calls in advance, we just need to credit it. Clear? Now my question is, when is that you will be debiting this calls in arrears and when is that you will be crediting this calls in advance? Is it while passing the due entry or is it while passing the receipt entry? This is my question. Clear? Okay, now let me make it much more simple. Now when do you think you will be realizing that there is some amount which is in arrears? Is it while passing the due entry or is it while passing the receipt entry? whenever you guys are passing the due entry, you will be having an assumption that all the shareholder will be making the payment. Okay, so due entry will be passed to the extent of entire shares. Okay, whatever has been issued, to the extent of that entire number, you will be passing the due entry. Only when you receive the actual amount, you realize that so and so shareholder did not pay the amount, or so and so shareholder paid the amount in advance. So what I'm trying to convey over here is, whenever you pass the receipt entry, okay, it is at that point of time wherein you need to give effect to calls in arrears or calls in advance. Okay, the effect for calls in arrears and calls in advance should be given while passing the receipt entry. Okay, so I'll just write it over here. Okay, so this debit and this credit, okay, has to be given effect only while passing the receipt entry. Okay, so whenever we are passing this particular receipt entry, that is the place wherein we need to give effect to calls in arrears and calls in advance. I hope you guys understood the logic behind this. Very simple logic, guys. Only when I actually receive the amount. Now let us say I had given a loan to you guys. Okay, let's say to the extent of 2 lakh rupees. Okay, so in my books, okay, while passing the due entry, I'll be showing as if this entire 2 lakh rupees is receivable. Okay, now what you do is, on the due date, you pay me only 1.5 lakh. Don't you think only then I'll be realizing that out of 2 lakh you are paid only 1.5 lakh and 50,000 rupees is still in arrears? Correct? So when will I realize that there is some amount which is in arrears, or there is some amount which I have received in advance? The moment I actually receive the amount. Okay, that is the point wherein I realize that there is some amount which is still pending, or there is some amount which I have received in advance. So that's why this calls in arrears and calls in advance, the effect has to be given while passing the receipt entry only. Hope you guys understood this. Okay, so let's just make a gist of whatever we discussed pertaining to calls in arrears and calls in advance over here. Calls in arrears and calls in advance. So first let me just write the meaning of these two terms. Okay, so first let me write the meaning of the term calls in arrears. So what is calls in arrears? So in case the shareholder fails to make the payment in spite of continuous reminder, then such amount shall be called as calls in arrears. Okay, so it is an asset that is receivable to the company, and therefore has to be what? It has to be debited. Simple. Just remember this much: calls in arrears has to be debited. Okay, when it comes to calls in advance, what happens in case of calls in advance? So here the shareholder pays the amount even before it is called for. Okay, so even before the company makes a call, okay, so the shareholder would have already paid this particular amount. Okay, so this is what is called as calls in advance. Okay, so let's say shareholder paying the call money at the time of allotment itself. So what is he doing? He was supposed to pay only the allotment stage money. Okay, but during allotment, along with allotment stage money, he is also paying this particular call money. Okay, so this would be treated as calls in advance. Okay, now calls in advance shall be treated as liability till the time it is called, and therefore has to be credited. Okay, so just try to remember this much. When it comes to calls in advance, it has to be credited. Okay, and what about calls in arrears? It is receivable and therefore it has to be debited. Clear? Now another crucial point what you need to remember is when is that you need to debit this calls in arrears and when is that you need to be credit this calls in advance. Okay, so the effect for calls in arrears and calls in advance has to be given while passing the receipt entry. Now whenever we are passing this particular receipt entry, okay, it is that point of time wherein we need to give effect for this calls in arrears and calls in advance. Okay, just try to remember this particular point. Clear? Hope you guys understood this. Okay, so we also have something called as interest on calls in arrears and interest on calls in advance. Okay, so which we'll be discussing subsequently. So let's just cover this particular aspect first. Now look at this. Okay, let me just explain by just giving an example. Okay, so let's say ABC Limited issued 10,000 shares of rupees 10 each. Okay, so application stage money, let's say it is 2 rupees. Allotment stage money, let's say it is 5 rupees. And first and final call will be the balance 3 rupees. Clear? So first and final call it is 3 rupees. Now let us say Mr. A, okay, who was holding, let's say 1000 shares, failed to pay the allotment money. Okay, so Mr. A, who was holding 1000 shares, he failed to pay this particular allotment money. Okay, so it would be treated as what? It would be treated as calls in arrears. Okay, now pass the necessary journal entries. Now let me tell you, okay, so what entries will we be passing with respect to this particular situation? Okay, so first thing is the company is issuing 10,000 shares, application money is 2. So you already know the journal entry for receipt of the application money, right? So what would be the first entry? Bank account debtor 10,000 shares into 2, this would be 20,000. To what? To share application account. Okay, so bank account debtor to share application account, this would be your first journal entry. Okay, now where am I supposed to transfer this application money? This will be transferred to share capital, right? So share application account debtor 20,000 to share capital account. Okay, so this is the transfer entry. Okay, so there is no confusion pertaining to these entries, right? Correct. Now the allotment stage. Okay, so when it comes to allotment stage, first thing is I'll be passing the due entry. Now when I'm passing the due entry, I'll not be having any sort of doubt that any person for that matter will be making default. Okay, so while passing the due entry, I'll be having an assumption that all the shareholder will be making the payment on time. So what I do is, while passing this particular due entry, okay, so I assume that everybody will be making the payment. So what would be the due entry? The due entry would be like this: share allotment account debtor 10,000 shares into 5 rupees. Okay, so this would be 50,000 to what? To share capital account. $50,000. This would be the entry. Now what happened? Out of this particular 10,000 shares which I had issued, one of the shareholder who was holding 1,000 shares, that is Mr. A, he did not pay this allotment money. Okay, so totally I was supposed to collect the allotment money to the extent of 50,000. Okay, that is 10,000 shares into 5 rupees. But actually if you see how much money I would have collected, I would have collected the amount only to the extent of this particular 9,000 share. Why? Because Mr. A, who was holding 1,000 shares, he did not pay this particular allotment money. It means the amount is still arrears from this particular person, Mr. A. Okay, now the entry would be like this. Now calls in arrears, is it receivable or payable? It is receivable, right? So which is an asset, therefore we need to debit it. Okay, so now look at this. While passing the receipt entry, okay, you guys already know that calls in arrears and calls in advance we need to give effect while passing the receipt entry. Now let us understand how exactly the receipt entry would look like. Okay, so let's have a look at this. The receipt entry would be like this: bank account debit. Now you guys tell me, so for how many shares I would have received this particular allotment money? So I wouldn't have received to the extent of 1,000 shares, right? Because Mr. A, who was holding 1,000 shares, he did not pay the allotment money. Okay, it means we would have received the amount only to the extent of 9,000 shares. So 9,000 shares into 5. Okay, so to the extent of 45,000 we would have received. Okay, and how much is the amount which will be in arrears? It would be to the extent of those 1,000 shares which is held by Mr. A. Okay, so 1,000 shares into 5, that is 5,000 rupees will be treated as calls in arrears, which is an asset, therefore we will be debiting. Okay, so look at this. So calls in arrears account debit, 1,000 shares into 5. Okay, so there will be arrears to the extent of how much? So there will be some amount to the extent of arrears which would be 5,000. Yeah. So calls in arrears account, it is receivable, therefore I will be debiting to what? To share allotment account. Okay, so to share allotment account. So totally I was supposed to receive 50,000 at the time of allotment. So this is how we'll be passing the journal entry. Okay, now let's say case 2. Okay, or example number 2. This is for calls in arrears. Now let's say example number 2 for calls in advance. Okay, so Mr. A, who was holding 1,000 shares, okay, so paid the allotment money as well as call money. Or he paid the call money . At the time of allotment stage itself. So at the time of allotment, what he is doing is, he is not only paying the allotment money, but along with allotment money, he is also paying this call money. So he is paying some amount in advance. Okay, so let us understand what exactly will be the journal entry. So first stage, that is application stage, nothing would change. Okay, so nothing would change till here. Okay, so application stage, the same entry. Okay, bank account debit to share application account, then we'll be transferring the amount to share capital. The entry will be share application to share capital. Even the due entry. Okay, so at the time of passing the due entry, I'll not be having any knowledge like how many shareholders will be defaulting or how many shareholders will be paying the amount in advance. Okay, now at the time of allotment, I was supposed to collect how much? 50,000. But can you tell me how much is the amount which I would have actually collected? I would have collected this entire 50,000, and along with this 50,000 to the extent of those 1,000 shares. Okay, so I would have collected the first call money also. How much was the first call money? Look at this. First and final call money was 3 rupees, right? Correct. So Mr. A, who was holding 1,000 shares, along with this 5,000, he would have also paid this particular first and final call. Okay, so effectively at the time of allotment, I'm not collecting just the allotment money. Okay, so 50,000, no doubt, yes, we are collecting, but along with this 50,000, I'm also receiving this 3,000 rupees. What does this 3,000 rupees represent? This 3,000 is nothing but the first and final call money of Mr. A. Mr. A is holding 1,000 shares, right? So first and final call, we are supposed to collect 3 rupees. Okay, so totally we would have collected 53,000 rupees. Now look at this entry. The entry would slightly change. The entry would be like this. bank account debit. Okay, so along with this 50,000 we are also collecting this 3,000. Okay, so bank account debit 50,000, which is the allotment money, and 3,000 is nothing but the first and final call money pertaining to Mr. A. Okay, so we are collecting to the extent of 53,000 to what? To share allotment account. So out of this 53,000, how much is the amount which belongs to allotment stage? 50,000 rupees is the amount which belongs to allotment stage, and then the remaining will be treated as what? The remaining will be treated as calls in advance. Okay, so how much is calls in advance? This would be to the extent of that 1,000 share, okay, which is held by Mr. A. Okay, so 1,000 into 3. Okay, so which is 3,000. This is how the journal entry has to be passed pertaining to calls in arrears and calls in advance. So calls in arrears, always remember it is an asset, therefore we'll be debiting it. Calls in advance, it is liability, therefore we'll be crediting it. When are we supposed to give effect for this calls in arrears and calls in advance? While passing the receipt entry. Look at this. So whether it is calls in arrears, so even calls in arrears for that matter, if you see, when did I give effect? While passing the receipt entry. Okay, so same way if you see calls in advance, when did I give effect? While passing the receipt entry again. Okay, so only when I pass this receipt entry, or only when I actually receive the amount, I'll be able to realize, okay, so how much is the amount which is received in advance, or how much is the amount which is still in arrears. Clear? Hope you guys understood this. Okay, yeah. Okay, so if you just go through these journal entries, what we discussed, more than sufficient, guys. Okay, so calls in arrears we need to debit, calls in advance we need to credit, and when exactly are we supposed to debit and credit these two things? While passing the receipt entry. If you remember this much, more than sufficient. Okay, so fine, let's have a look at this illustration number 5 now. EF and Co Limited issued 500 lakh equity shares of rupees 10 each at a premium of 4 rupees per share, payable 1 rupee per share on application, 6 rupees per share, okay, at allotment, and this premium is included in allotment stage, 3 rupees on first call and balance on final call. The shares were subscribed and all the money due was received except first call money on 1 lakh shares, okay, and final call money for 1,50,000 shares. Okay, so they have told that all the money was actually received. Okay, so except first call to the extent of 1 lakh shares and second and final call money to the extent of 1,50,000 shares. So this is clearly a sign of what? This is clearly a sign of calls in arrears. Okay, everybody made the payment except to the extent of 1 lakh shareholders. They did not pay this first call money, and this 1,50,000 shareholders who did not pay this second and final call money. Okay, so this is clearly a sign of calls in arrears. So calls in arrears, are we supposed to debit or credit? We are just supposed to debit because it is receivable. Okay, and in which entry are we supposed to debit? We are supposed to debit this calls in arrears while passing the receipt entry. Okay, so whenever we actually receive the money, that is the moment wherein we realize that there is still some amount which is in arrears. Clear? So let's straight away just solve this illustration number 5. Okay, so everything seems to be similar to the previous illustration. Okay, like issue price and all. Okay, so I'll just write it from here. Look at this. The same 500 lakh shares. Okay, so they are issued at 14 rupees. This is similar to the previous illustration. Only thing is they have just inserted additional adjustment pertaining to calls in arrears. So illustration number 5. Okay, so till here nothing would change. Okay, it would be exactly the same thing. Okay, so 500 lakh shares of rupees 10 are issued at 14 rupees. Okay, so application stage it is 1 rupee, allotment 6, which includes the premium. So premium will be 6 rupees, share capital will be 2 rupees, first call to the extent of 3 rupees, second and final call to the extent of 4 rupees. Clear? Now the first entry, what would be the first entry? This would be with respect to receipt of the application money. Okay, nothing would change. bank account debtor to share application account. Okay, so 500 into 1, this would be 500 lakh, 500 lakh. The entire amount will be transferred to share capital. Okay, so share application account debit to share capital 500 lakh and 500 lakh. Now allotment, from the allotment stage and then onwards we'll be passing the due entry first and then the receipt entry. Okay, so due entry, remember I told you, so allotment is the stage wherein the securities premium is included. So wherever you find share capital, that is the place wherein you need to give effect to securities premium. So look at this entry. Allotment stage, totally I am supposed to collect 6 rupees. So 500 lakh into 6, this would be 3000 lakh. Out of this 6 rupees, how much is the amount pertaining to share capital? Share capital will always be representing the nominal value or face value. So out of the 6 rupees, 2 rupees is what will be transferred to share capital and remaining 4 rupees is what will be transferred to securities premium. Okay, so therefore the due entry would be like this. Okay, so share allotment account debit 3000 lakh to share capital. Okay, so 1000 lakh to securities premium 2000 lakh. Clear? And then receipt entry, was there any default with respect to allotment stage? No. Okay, look at this, everybody paid the application money and allotment money. Okay, so when did the default arise? The shares were all subscribed and all the money was duly received except the first call, okay, to the extent of 1 lakh shares, and second and final call to the extent of 1,50,000 shares. Okay, so till allotment there is no due. Okay, everything is received. Okay, so there is no arrears amount. Okay, so whatever is the amount which is due, it is rightly received till allotment stage. From the first call money, okay, and then onwards, okay, there was some amount in arrears. So when it comes to first call, to the extent of 1 lakh shareholders, they did not pay the first call money. When it comes to second and final call, to the extent of 1,50,000 shareholders, they did not pay this second and final call money. Okay, so look at this. So call money, okay, share first call account debit to share capital, nothing would change. But when it comes to receipt, okay, so look at this carefully. I was supposed to collect the amount to the extent of 500 lakh. Okay, so to the extent of 500 lakh I was supposed to collect. Okay, so this was receivable. How much was in arrears? To the extent of 1 lakh. Okay, so to the extent of 1 lakh they did not pay the amount, right? Okay, to the extent of 1 lakh they did not pay the amount. Okay, so this would be treated as what? This would be treated as calls in arrears. Okay, so effectively the first call I would have received to the extent of what? I would have received the first call to the extent of 499 lakh shares. Okay, so actually received, or you can say first call money received. So they have clearly mentioned that out of 500 lakhs, okay, so one of the person was holding 1 lakh share, he did not pay this particular first call. So actual receipt entry would be like this: bank account debtor 499 lakh into what is the amount which is due at first call? It is 3 rupees, right? Correct. So this would be 499 into 3. That would be how much? 499 into 3. This would be 1497 lakh. Okay. And then calls in arrears account debit. I need to debit this calls in arrears. Why? Because it is receivable. Okay. So calls in arrears account debit. I'll be debiting to what extent? Okay, so let us just calculate it. So one of the shareholder who was holding 1 lakh share, okay, he did not pay this particular amount. Okay, so this would be as good as 1 lakh into 3. So this would be 3 lakh. Okay, so this is 499 lakh. I hope you guys understood from where did we get this 499 lakh. Out of 500 lakh, one of the shareholder who was holding 1 lakh share, he did not pay. It means to the extent of balance 499 lakh, they would have already paid this amount. Okay, to what? To share first call account. Okay, that is 1500 lakh. Now same thing. Okay, we need to pass it for second and final call. Okay, so what will be the entry for share second and final call? The due entry. Instead of just calling it as share first call, here we'll be calling it as share second and final call account debit. So when it comes to share second and final call, what is the amount which was due? Second and final call, if you see, 4 rupees is what is due. Okay, so 500 lakh into 4. Okay, so this would be what? This would be 2000 lakh. To share capital, this would be again 2000 lakh. Clear? Now when it comes to second and final call stage, how many shareholders defaulted? Okay, so they have clearly mentioned that when it comes to second and final call, to the extent of, look at this, and final call money to the extent of 1,50,000. Okay, so to the extent of 1,50,000, they did not pay this second and final call. Okay, so I'll just write it like this. So with respect to second and final call, I was supposed to receive to the extent of 200 lakh. Okay, or with respect to number of shares, if you just want to write it in this way. Okay, so I was supposed to receive to the extent of entire 500 lakh, but I did not receive to the extent of 1.5 lakh. Okay, so the number of shareholders who made default at the time of second and final call is how much? It is 1.5 lakh. Okay, to the extent of 1.5 lakh, they did not pay. So they would have paid to the extent of 498.5 lakh. Clear? So to the extent of 498.5 lakh, they would have paid to the extent of 4 rupees each. Okay, because second and final call money is 4 rupees each. Is this clear? So what will be the receipt entry? Now look at this receipt entry. I did not receive the second and final call money from the entire 500 lakh shareholders. I would have received the second and final call money only to the extent of 498.5 lakh shareholders. Okay, so the entry goes like this: bank account debit. I would have received only from 498.5 lakh. Why? Because the remaining 1.5 lakh shareholders defaulted with respect to making the payment of second and final call. Okay, so 4 rupees. So this would be how much? This would be 1994 lakhs. Okay, so then comes calls in arrears. So calls in arrears account debit. So to the extent of 1.5 lakh shareholders, they did not pay 4 rupees. Okay, so this would be how much? This would be to the extent of 6 lakh. Okay, so calls in arrears would be 6 lakh to share second and final call account. Okay, so this would be to the extent of 2000 lakh. This is how the journal entry would appear. Clear? If you just want to have a look at the study material, look at this. So whenever they say cash book will be including only the receipts. Okay, so it will not be including the due transactions. Look at this. Okay, so cash book debit or bank account debit. So bank account debit to share first call. Okay, how much is it? 1497. Look at this. Don't you think here also the entry what we passed? Just a second. Look at the solution. Bank account debit to share first and final call. Sorry, first call. Don't you think it is debited only to the extent of 1497? Correct? And what about the second and final call? It is 1994. Here also, if you see, you guys will be able to see this amount, 1994. Do you find this? Clear? So these are the amount which we actually received. When it comes to first call, we received to the extent of 1497. I've already shown you the calculation over here. How did we get this 1497? Out of 500 lakh, one of the shareholder who was holding to the extent of 1 lakh shares, he did not pay. So I would have effectively collected the amount only to the extent of 499 lakh shares. Okay, so 499 into 3, 1497. And here, out of 500 lakh, to the extent of 1.5 lakh, I did not receive the second and final call. So effectively, I would have received the amount only to the extent of 498.5 lakh. Okay, so bank account debit 498.5 lakh into 4. Okay, that would be 1994. Is this clear? Okay, so same figure has been given in your material, 1994. Okay, and what about calls in arrears? Yes, what about calls in arrears? How much is the calls in arrears? They haven't given effect for this particular calls in arrears. Calls in arrears over here it is 3 lakh and over here it is 6 lakh. Okay, so they would have shown the entry over here. Just a moment. Okay, what have they asked? Give the journal entries to record the above transaction. Okay, so they haven't given effect to this calls in arrears over here. Let me just check. No, they haven't given an effect for this calls in arrears, but the entry would actually be like this. Okay, this would be the complete entry. Okay, so you guys can just refer to this particular solution because they're asking you to pass the journal entry. Okay, but when I see your study material, what they have done is they have prepared the cash book, and only for the remaining transaction they have given effect in the journal. Okay, so wherever it is cash, so this particular entry they would be bothered only about this 1497. They wouldn't be bothered about this 3 lakh rupees of calls in arrears. Okay, because when I'm debiting this cash book, I'll be concerned only about this figure and this figure over here. Okay, so nowhere I'm concerned about the 6 lakh rupees. Why? Because I'm not preparing this calls in arrears, but the complete journal entry would be like this. Okay, this would be the complete journal entry. Hope you guys understood. Calls in arrears is receivable. Okay, so therefore we just need to debit it. Clear? Okay, now when it comes to calls in advance, okay, so you already know the meaning of this particular term. What is calls in advance? Even before the company is making a reminder, if the shareholder is paying the amount in advance, that would be treated as calls in advance. Okay, so one of the shareholder paying the allotment money, and he is also paying this first and final call money. So at the allotment stage itself, he is paying not only the allotment stage money but also the first and final call. So this first and final call money he is paying in advance, that would be treated as calls in advance. Okay, so that would be liability for the company. So therefore it will be showing credit balance. We just need to credit it. Clear? So when do we credit it? We will be crediting this particular calls in advance while passing the receipt entry. Hope you guys understood this. Clear? Okay. Okay, let's have a look at this particular illustration number 6. So probably over here they would have given effect for calls in advance. Okay, so what is this calls in advance? The meaning is very simple, guys. If I'm receiving the amount in advance even before me making a call, okay, I did not make this first and final call. At the allotment stage itself, I'm receiving the allotment money as well as first and final call money. Okay, so this first and final call money which I'm receiving in advance, that would be treated as calls in advance. Okay, so till the time I'm actually supposed to make this call, it would be treated as liability and therefore will be crediting this. Okay, and in which entry are we supposed to credit it? While passing the receipt entry, because this is the moment wherein we realize, okay, that this is the amount which is received in advance. Okay, so whenever the amount was due, okay, I'll never have any glimpse of this particular transaction that so and so shareholder will be paying the amount in advance or so and so shareholder will be keeping so much of amount in arrears. I won't be having any idea about it. Okay, so only when I actually receive the amount, I'll get to know that this particular shareholder paid the amount in advance or this particular shareholder the amount is still in arrears. Okay, so that's the reason for calls in arrears and calls in advance we always give effect while passing the receipt entry. Simple. Okay, so let's solve this last illustration for the day. So GH and Co Limited issued 5,000 equity shares of rupees 10 each at par. Okay, payable 2 rupees on application, 4 rupees on allotment, okay, and 4 rupees on first and final call. Okay, the shares were all subscribed and all the money due was received. One shareholder holding 200 shares paid the call money along with the allotment money. So at the time of allotment stage itself, he is not only paying the allotment money but along with allotment he is also paying this call money. So this is clearly a sign of what? This is clearly a sign of calls in advance. Okay, so he is paying the money even before the call was actually made. Okay, at the allotment stage itself he is paying the allotment money as well as call money. The amount was subsequently adjusted. Okay, so give the journal entries to record the above transaction. Okay, so they're asking us to pass the journal entries. Okay, now, okay, so before we discuss about this particular illustration number 6, now suppose here we showed it as calls in arrears. Subsequently, when this arrears amount is received, what would be the entry? The entry would be like this. Okay, bank account debit to calls in arrears. Okay, so calls in arrears which was debited over here, we'll be crediting it now. And when we actually receive any money for that matter, okay, so whenever we receive any money, you know that we just need to debit this bank account. Okay, so bank account debit to calls in arrears, this would be the entry what will be passing when we actually receive this arrears amount. Okay, let me repeat it once again. Here if you see, okay, I just told you that calls in arrears we need to debit. So till this particular point of time the amount is in arrears, but later at some point of time, don't you think it would be received from the shareholders? Now let's say after 1 week or 1 month, I received this particular arrears amount. Now what entry will I be passing when I actually receive this arrears amount? The entry will be very simple: bank account debit to calls in arrears. Okay, just try to remember this. Okay, now let's start up with this illustration number 6. Okay, so what was the issue price of share? Issue price was 10 rupees. Okay, so out of this 10 rupees, how much was application stage? 3 stages basically: application, allotment and first and final call. Okay, let's just go through the question. So 2 rupees was received at application, 4 rupees on allotment and 4 rupees on first and final call. So 2, 4 and 4. Okay, now how many shares were issued? 5,000 equity shares were issued. Okay, so let us pass the journal entries. So application stage, when I actually receive the application money, you know the entry, right? Okay, so bank account debit 5,000 shares into 2 rupees. Okay, so this would be 10,000 to share application account 10,000. Clear? So bank account debit to share application account, this would be the first entry. Now where am I supposed to transfer this amount? I am supposed to transfer this amount to share capital. So the immediate next entry will be share application account debit. This entire 10,000 rupees will be transferred to which account? This will be transferred to share capital. Okay, so to share capital account 10,000. Simple. Clear? Now after this, okay, so the second stage would be allotment stage. Now from the allotment stage and then onwards, you guys know that we are supposed to pass the due entry first and then the receipt entry. Okay, so let me just pass the due entry first. The due entry will be share allotment account debtor 5,000 shares into, what is the allotment money which is due? You can refer to this particular table. 4 rupees is what is due at allotment. Okay, so 5,000 into 4. So 4 times it is 20, so 20,000 to share capital account. So here the shares were issued at par, so no question about the securities premium. This would be the entry. Now after this, what do you think? This entire amount, was there any arrears or entire amount was received? Here there is no calls in arrears, but there was a shareholder who paid the amount in advance. At the allotment stage itself, he also paid this first and final call. Okay, so let's just read this particular adjustment once again. Okay, the shares were all subscribed and all the money due was received. One shareholder who was holding 200 shares, okay, paid the call money along with the allotment money. Okay, so technically speaking, over here when I'm passing this receipt entry, okay, along with this 20,000 rupees, I would have received some extra amount, okay, to the extent of those 200 shares which was held by one of the shareholder, because he is paying the first and final call money also over here itself. Okay, so look at this. When I'm passing this particular receipt entry, bank account debit, okay, so along with this particular 20,000 rupees, I would have also received, okay, the first and final call money. How much is the first and final call money? It is 4 rupees per share. Okay, so here the calls in advance shall be how much? So this will be 200 shares into 4 rupees. Okay, so totally it would be like 800 rupees. So technically speaking, I would have received 20,000 as well as this 800 rupees. Okay, so totally I would have received this 20,800 rupees at allotment, because I'm not only receiving this allotment money, but along with this I'm also receiving the share first and final call money pertaining to those 200 shares which are held by one of the shareholders. Okay, so bank account debit to calls in advance. So calls in advance is a liability, therefore will be crediting. Okay, so 200 shares into 4 rupees. Okay, so this would be 800 to what? To share allotment account. Okay, so how much is the amount pertaining to allotment? So 500 shares, sorry, 5000 shares into 4 rupees. This would be the entry. If you just check out the total of debit and credit, it is same, 20,800 over here, 20,800. Okay, just add these two, 20,000 plus 800. Okay, this would be the receipt entry. Okay, now while passing the next stage, okay, that is share first and final call. Look at this. Call money stage. So again, when it comes to call money stage, what will happen? We just need to pass the due entry first and then the receipt entry. Okay, so how much is the amount which is due at call money? It is again the same 4 rupees. Okay, so look at this. The due entry would be the same, share first and final call account debit. How many shares? Yeah, 5000 shares into 4 rupees. This would be like 20,000 rupees to share capital account. 5000 shares into 4 rupees. This would be like 20,000 again. Now tell me, how many shares, or for how many shares will I actually be receiving this amount at the time of share first and final call? So totally the company issued 5000 shares, right? Don't you think out of these 5000 share, one of the shareholder who was holding 200 shares, he has already paid this first and final call, right? Correct? Look at this. He has already paid some amount in advance. Okay, will he be paying the amount again? No, right? Obviously he will not be making the payment again. Okay, so here I would be receiving the amount only to the extent of 4800 shareholders. Why? Because to the extent of 200 shares I have already received this amount at the time of allotment itself. Okay, so when I pass this receipt entry, okay, so look at this, bank account debit, I will not be debiting to the extent of entire 5000 shares. I will be debiting only to the extent of 4800. Now how did I get this 4800? Total number of shares was 5000. Out of these 5000, to the extent of 200 shares, it is already been received in advance. So they will not be making the payment again. Okay, so I will be receiving this first and final call money only to the extent of 4800. Okay, so this will be how much? So this will be 19,200. Okay, so 19,200. The remaining 800 rupees I need to adjust it now. Okay, so till the time the call was made, it was treated as liability. Now I need to nullify it. Okay, so I'll be debiting this calls in advance over here. So calls in advance account debit, because this is the time wherein I need to adjust it. Okay, so calls in advance account debit to what? To share first and final call. So share first and final call, it is 20,000. Out of this 20,000 rupees, I am actually receiving to the extent of 19,200, and remaining 800 rupees I am adjusting from the amount which was received in advance. So here we have got calls in advance 800 rupees, I am adjusting it. So effectively, if you see, calls in advance debit of 800 and calls in advance credit of 800. So this will get nullified. So there won't be any balance in this calls in advance. Okay. So the moment the first and final call is actually made, okay, so what we'll be doing is we'll be adjusting from the advance amount which was already received. Okay, so therefore when the advance was already received, this was treated as a liability, therefore it was credited. Now when I'm adjusting it, okay, I just need to debit it because I need to nullify the balance, therefore I'm just debiting it. If you just have a look at the journal entries, yeah, so here in your study material, if you see, all the journal entries have been properly given. Look at the journal entries. Let's just compare it with our solution. So first entry, when I'm receiving this application money, okay, so bank account debit to share application 10,000, 10,000. Look at this, bank account debit to share application 10,000, 10,000. Clear? Then the second entry, okay, I just need to transfer the share application amount to share capital. Share application account debit to share capital 10,000, 10,000. The same entry. Look at this. Share application account debit to share capital 10,000, 10,000. Okay, so after this, the second stage and then onwards, we just need to pass the due entry first and then the receipt entry. Look at the due entry. Share allotment account debit to share capital 20k, 20k. Okay, so share allotment account debit to share capital 20,000, 20,000. Then this is the entry. While passing the receipt entry, we should be giving effect to calls in advance. Okay, let's just check this entry out. So what they have done is they have passed two entries separately. If you club these two entries, okay, so the entry would still be the same what we have got. bank account debit 20,000, bank account debit 800 over here. So totally bank account is debited to the extent of 20,800. So we have also debited bank account to the extent of 20,800. Look at the credit. 2 share allotment 20,000, 2 calls in advance 800. Okay, same entry. 2 share allotment 20,000, 2 calls in advance 800. Are you guys getting this? Clear? And then finally, when this first and final call is due, okay, share first and final call account debit to share capital 20,000 and 20,000. Okay, so look at this. Share first and final call account debit to share capital account 20,000 and 20,000. And then when it comes to the receipt entry, okay, so this was the due entry and this will be the receipt entry. Okay, so 1 second, I'll just write it over here. Due entry and then the receipt entry. Just a second, guys. Okay, now look at this receipt entry. So I'll not be receiving this entire 20,000, okay, because out of this entire 20,000, to the extent of those 200 shares, that is 800 rupees, he already paid at the time of allotment. Okay, I'll not be collecting the amount again from him. Okay, so I'll be collecting only 19,200 rupees from the remaining 4,800 shareholders. I'll be adjusting this calls in advance. Look at this last entry. Bank account debit 19,200, calls in advance account debit 800. To what? To share first and final call 20,000. Don't you think it's the same entry? Yes? Hope you guys understood this. Okay, so fine, we'll just stop over here, but make sure that you guys glance through these illustration whatever we have discussed. Okay, on a regular basis, guys. Okay, I'm telling it on a repeated basis, just go through the stuff. Okay, so whatever we discuss in each and every day's class. Okay, thank you so much, guys. See you guys tomorrow. Thank you.